Wow, wow, wee, wah. The coming port strike, which may come as soon as October 1st, could create economic hell just days before the 2024 election and the critical for GDP holiday shopping season. In this video, we're going to go through what's happening here. Can the government stop this problem and these issues? Have they done it before? What is Biden actually going to want to do, given union support for Democrats? And quite frankly, can the government even do anything here? Then, after we get through all of that sort of background, we'll get into what the impacts of this port strike might be on inflation, stocks, and of course, the Fed. So with that said, let's get started. Hey everyone, Meet Kevin here. It is time to talk about the port strike. Many of you have been asking exactly about this, and what do we got? Well, we got the Longshoremen's Association negotiating for 45,000 dock workers at 3 dozen, that's about 36 different ports, all the way up and down the East Coast and around the Gulf into Mexico, or the Gulf of Mexico, into Texas. So think Maine to Texas. This is a huge number of dock workers. Keep in mind, we don't actually have that many dock workers, maybe somewhere around 60 plus thousand in that range. So you get the vast majority of dock workers on the East Coast into the Gulf, considering participating in this strike. Keep in mind, if they do go on strike, pay usually stops when the strikes begin. Sometimes workers end up getting striking benefits, but when worker pay stops, you do have not just the impact of what they're working on messing up an economy, but the velocity of money of their spending messing up local economies. So think about this. If you have tens of thousands of people in local economies no longer spending or limiting their spending at local restaurants, those restaurants get hit harder. Local discretionaries get hit harder. You name it. Now, states like California do have bills that force striking workers to be eligible for unemployment, but most of the strikes in this case, those East Coast and Texas areas, don't actually have that requirement. These ports that are affected by this potential strike affect about 50% of U.S. seaborne imports. Basically, half of all the stuff that gets shipped over to America and from America. And quite frankly, there are estimates that are slightly wide-ranging in terms of how much of an impact this could have. JP Morgan thinks the impact could be somewhere around $5 billion per day. Other more left-leaning sources, not suggesting that JP Morgan's taking a political stance here, but a lot of sources that lean right are quoting JP Morgan. A lot of sources that lean left quote other research, suggesting the impact would only be $1 billion per day. But let's go with the $5 billion figure just for a moment. 50 days at $5 billion would remove about 1% from our GDP. So GDP that technically, per the Atlanta Fed, is now growing at 3.1%, could potentially fall down to 2.1% in just 50 days. And of course, if you double that, then you're down another percent, but you're also going into a really critical holiday shopping season, so the impact could be even larger. Retailers think this is going to be a pretty big hit to the U.S. economy because they're the ones that build up inventories from shippers. Now, the good news is, and I've kind of seen this in August, mostly because these discussions and negotiations have been going on since June and July, a lot of retailers started building up inventory to sort of prevent a large impact from a potential strike. So it kind of seems like a lot of larger consumer companies have already built up anticipation for this. And so we should be able to have some sort of, I like to say, stretchy rubber bandness in inventories that would actually prevent shortages for, quite frankly, any kind of product that gets shipped. This could be cars being, shipped by companies like Tesla, computers, electronics, apparel, building material, you name it. I mean, pretty much anything that goes in a container is affected here. Now, of course, there are expectations that individual consumers are going to have to pay higher prices. I do dispute that suggestion, though we'll get to the impact and pricing in just a moment. Now, first, let's just keep talking impact here. this is going to be potentially the first walkout by these particular union members in about 50 years. It's not the first strike we've seen at ports. Like, we've had the Port of Long Beach in LA strike in 2001, for example. We'll talk about that as well. But this is expected to really disrupt the economy for weeks just before the election, not just in those local markets, but also as companies go through those built-up inventories. The longer this goes on, the more damage it just causes. You're going to hit hubs like New York, Baltimore, Norfolk, Savannah, Houston. A lot of potential problems, given that this is right before an election as well. The reason workers are striking, which is interesting, has to do with their fear of getting, frankly, screwed by automation, and they're looking for higher pay raises. This is coming at a time when margins in shipping have already really gotten hit hard, thanks to not only an economy that's been slowing down, but also those Houthi strikes in the Red Sea that have made it substantially more dangerous to ship in parts of the world and a lot more expensive as a result. Now, some of these automation issues kind of go back into history, and there's kind of a neat example beyond sort of the Luddites of the Industrial Revolution, but think about the 1950s. And think about the container for a moment. Usually when we think about container shipping, we just think, oh yeah, I mean, container shipping has been around forever. I mean, we've all seen pictures like this before. Ships full of containers. Well, it didn't used to be that way. Back in the 1940s and 50s and before, you actually didn't have containers. So shipping was really expensive and, quite frankly, deadly, because people would unload one box and then barrels of stuff would roll over them. It was pretty dangerous. You had various different loads that you were trying to Tetris in, different shapes, different pallet sizes, you name it. It used to, back in the 1950s, cost $6 per ton to unload a ship. And as soon as the container was invented, that price fell by 96.8% down to just 16 cents, which is crazy. Massive decline thanks to the innovation of just the container. And I'm thinking to myself, wow, the container was innovative? Like, I just didn't even consider that the container was innovative, but it was massively innovative. And so a lot of dock workers then were freaking out. They were threatening to sink ships because of containers taking away jobs, dock worker jobs. Now, interestingly, dock worker jobs actually grew after the introduction of the container because it became a lot more profitable to actually ship stuff. So you ended up getting maybe an initial layoff period, which is usually what happens. With a new innovation, you get sort of an initial layoff period. But then you end up creating so much productivity, you end up growing the industry. And so then we actually ended up growing dock workers from around 41,000 dock workers then to around 64,000 now. So, like, in the long term, automation can be a good thing. In the short term, of course, union workers freak out because they're like, I might get fired. And that is true. Especially since dock workers, some of them, when you include overtime, they can make over $200,000 a year. And they are doing really hard work and dangerous work and critical work to the economy. So there's a balance here. Now, there are these ideas that you could get the Biden administration to come in and prevent this worker strike. Maybe the Biden administration could prevent the worker strike or end the worker strike by using the Taft-Hartley Act. Now, the Taft-Hartley Act, this is important to know, was passed in 1947. And it created some restrictions for labor unions. It also forced unions to promise that they were not communists. Keep in mind that was done during the McCarthy era. That's the same time as sort of the Red Scare, anti-Japanese, Chinese, communist fears, blah, blah, blah. Also passed the right to work, banning mandatory union membership. There were a lot of things that were part of this. But the most important and critical part of this act that applies today is the fact that you could use the act to prevent a strike. You could basically sign a piece of paper, an executive order, and instantaneously force union workers back to work as the president. Now, this has been done before. Last time it happened was George W. Bush in 2001. He ended an 11-day shutdown of 29 West Coast ports and declared that ending of that strike vital to our economy and military, especially during an uncertain time. Which is interesting because we walked into the 2001 recession that year. So probably rightfully so, to try to keep the economy from suffering even more damage. And it's also interesting how history sort of rhymes, because right now a lot of people are really worried about a recession, and here we go with a port strike again, which could be the black swan that does drive us into recession again, which would be unfortunate. And Biden could sign a piece of paper and stop it. Richard Nixon stopped it in 1971, 30 years-ish before George Bush. But keep in mind, this is rarely used. And it's been 23 years, and it was 31 years before that. And both of those presidents were Republicans. Biden, on the other hand, he's a Democrat. And this is not to get political, it's just to say that Joe Biden is much more pro-union, given the pro-union voter pushing for Harris and Biden, at least at a larger margin, than pushing for Trump. Now, what does that potentially mean? Well, potentially means that the Biden administration is not going to end this port strike, which is not ideal, because it means the port strike could just go on in perpetuity right into the election and through a really critical holiday shopping season. Obviously, unless the Longshoremen Association and the Maritime Associations, they basically, well, the U.S. Maritime Alliance, it's called, they basically get together and work this out. But right now, they have no plans to talk before tonight when contracts expire, which means the strike could start as soon as tomorrow. So, where does this leave us with impacts? And again, just to be crystal clear here, so far the Biden administration says they have no plans to intervene. Now, they could flip-flop on that, especially if things get bad, but this is a big deal. And so now what we have to do is consider the economic impacts here. The first thing that might happen is we might see air cargo rates spike. Air cargo rates, mind you, are already up like 20 to 200% from last year. That's like a triple, mind you, at some ends of air cargo. Part of this is due to the Houthi Red Sea attacks, because shipping by sea has become extremely expensive and dangerous. Red Sea disruptions have also led container prices to spike. In 2023, we were sitting at like $1,900 a container to ship it. That's like pretty much at the average break even for the industry. Well, those spiked after the Houthi attacks to about $4,000 to $5,800 per container. And right now we're down to about $4,000. But this port strike could potentially lead container prices to spike again, because containers just won't be getting unloaded. So it'll be more expensive to get your container unloaded at a port that's actually open, because you have to reroute it and then you have to ship it from there. Because of that, people think that Union Pacific rail shipping to move product between different ports, like, okay, we were supposed to go to Jersey, well, let's ship it to California, it'll take longer to ship it over there, and then let's air freight it over where it needs to go, or ship it by rail. As a result, people think that air freight's going to go up and rail freight is going to go up, and that those companies might do well. Companies like Cathay, Eva Air, Korean Air, Union Pacific, these are all companies that people think will do well as a result of this port strike. But there's more of a problem than just companies making profit. If you want to look for other airlines, you could just look on their 10Ks to see what their exposure is to cargo shipping as well, in case you're looking for potentially an air freight investment. But it's really worth noting what a port strike could do for inflation. So a lot of folks think that this port strike is going to lead to a second wave of inflation. It is possible that the bond market starts trying to price in a second wave of inflation because of this port strike. But I actually don't think you're going to see consumer prices rise on this port strike. I think if yields go up, the Federal Reserve is going to be forced to talk them down, because otherwise they risk overdoing the tightening of the economy. And instead, higher shipping costs will be passed on from shipping companies to actual companies like consumer product goods, grocery companies, apparel companies, automotive companies. And so somebody's going to pay the bill, but I don't think it's going to be the consumer. So it's not going to be the freight companies. The freight companies are going to charge more. It's not going to be the consumer, because they're tapped. They can't pay anymore. So it's going to be the companies in the middle that have to, unfortunately, take it in the margin. So apparel companies, electronic companies, computer companies, building material companies, vehicle companies, you name it. Home Depots, Lowe's, whatever, Walmart's, Costco's. These are the companies that are probably going to see higher costs without an ability to pass those on. So we could see PPI prices go up, producer price index prices. We could see those rise, but I don't actually think we'll see consumer prices move. Of course, the question of all of this comes down to how long does the strike go on? Because companies started building up inventory in anticipation of this, it's possible that a 2 or 3 week shutdown doesn't actually do anything to the economy. We just keep humming along. A prolonged strike through the election, which is possible because oftentimes negotiators try to figure out like, well, who's going to be the next president? A prolonged strike could end up hitting GDP pretty hard, especially as you go into the holiday season, which is not good. And again, the companies that are going to get screwed are going to be your retailers, people actually selling to the consumers, department stores or some of the others that I've listed, especially the automotive industry. The automotive industry is already kind of getting screwed. I hate to say it, but look at like Stellantis this morning. Stellantis stock is down like 13% this morning. And that's because they were guiding a double-digit margin. Now they're guiding just 5.5% to 7% for 2024, citing, quote, challenges in the broader market and in China, deteriorating global industry dynamics. Stellantis makes brands like Chrysler, Dodge, Jeep, Maserati, and others, and just frankly, lower sales expected across most of the industry. So this is not really ideal. This is quite frankly problematic. I don't know that it's enough to be the black swan that a lot of folks are kind of looking for, because quite frankly at this point it's just a swan, like we're aware of it. But the black swan aspect of it would be, how long does this last? That's the question. And given the Biden administration's likely unwillingness to get involved in this strike, in ending the strike, given that that would be seen as anti-union, not good. Remember how I mentioned California offers striking workers pay? It's because Democrats generally enjoy supporting unions. It's usually a sort of an easy base to get votes from. It's all, as usual, very political. So, bottom line, out of all of this, do I think this will lead to a second wave of inflation for consumer prices? No. Will this lead to pain in margins for companies? Yes. Could it lead to volatility in markets? Yes. Will 2 to 3 weeks of strikes, if they even begin tomorrow, actually cause any problems? Probably not. Will strikes through the election cause problems? Yeah, likely. Anyway, that's my take. Thanks so much for watching. If you like this video, consider subscribing, share the video. Make sure you get your free stocks with Webull. You can get up to 75 totally free fractional shares of stocks by going to metkevin.com/Webull, paid promotion, or get life insurance in as little as 5 minutes by going to metkevin.com/life. It's the insurance Lauren and I use. It's amazing. I haven't tried it yet though, but I do pay for it. Anyway, go check it out at metkevin.com/life. Both of these paid promotions. I appreciate you for watching. We'll see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.